How is it possible that a protocol is paying you up to 50% each month just to trade on their platform? Yes, because this is exactly what is happening in a protocol that I will show you just in a moment. And the strategy that I will explain to you step by step, that's something that works. I tested out and could for real produce you that amount of money. There are a couple of tricks that you should learn, but don't worry because I will explain to you everything. Do you want to know more, guys? Please leave us a big thumbs up. Please do that. Do it now. Okay, guys, before to start, let me say this channel is about educational content and nothing has to be intended as financial advice. If you want to invest in anything, that's super cool because opportunities are that is insane, but do always your own research before because the crypto space, it is something that is risky. And don't forget, guys, to follow us also on Twitter and also on our weekly newsletter on Substack. You will find all the links into the description below. Okay, guys, let's start answering this question. Because why? Because, guys, this is something that's important. It's not just a matter to learn the strategy and to repeat it, but it's also a matter to understand why someone should pay us so much money. Is it something that is sustainable? This is something that will be happening for a long time or not? Well, guys, the answer is not. This is something that is happening right now, but in the future, with any probability, it will not happen again. In general, the situation that we are living in right now with airdrops and this kind of situation that are called liquidity mining, so people that are literally paying you to perform actions on their platform. Yes, because guys, remember, I was telling you, be paid to trade. And literally, as I told you, it's about 50%. But the same is happening with airdrops. The main difference between airdrops and what I will tell you here is that with airdrop, we don't have any kind of certainty because an airdrop, that's something that the team will release in the future. But we don't know how they will be releasing. Maybe we are investing money for a project that will release a poor airdrop. There is no certainty. So that's the reason why I rather go for something where I have more control, like the example that I will share with you just in a moment. And the main reason why there are projects that are willing to give you airdrops or on the other side, paying you to perform actions on their platform, well, it is pretty simple, guys. It's about marketing. Right now, even if the market we have seen Bitcoin the last couple of months going up by 2x, even 3x, the reality is that this small run has been just for operators. Check out all the metrics on my channel. Have you seen most of my videos are down by 90% the number of views that I got around a couple of years ago when we were in a bull run. Right now, retailers are not into the space, and it means that the cost for acquire a new user is going up because it's not a matter just to go out, release a token, release a platform, and everyone will start using it simply because they want to earn more money. And in that moment, yes, it will be easy to make money. Market can go up by 5x just overnight. Right now, this is something that is not happening. But this is also a good opportunity because all the projects, as we have said many times, bear market is for builders. The point of building is that you need to test what you have built. And that's the reason why they are rewarding with this kind of airdrops or this kind of APR just for trading. They want you. They want you as a customer. They want your feedback. They want your volume because at the end of the story, right now it's a big war to attract the base, so literally the fundamental in terms of users. And that's the reason why they are willing you to pay. And again, guys, this is an opportunity that is a generational opportunity. That's something that will not happen again in the next 3 to 5 years. This is something that is happening now, and it will last for a couple of months, maybe 6, 9 at maximum. But after that, the market will change. There will be obviously other opportunities, but this kind of opportunity, that's something that you can take it just now. Okay, now that we have understood why they are paying you for trade, let me share exactly which is the protocol that is paying you for trade and which is the strategy that you can apply step by step. So the name of the protocol is Equation. That's a perpetual platform that maybe you remember from one of my previous videos because it's coming also from one of my sponsors. But right now, they released and they revamped completely the platform. This is version 2, as you can see also from the interface of their website. They added more pairs. It's about 20, 30. I still don't remember, but it doesn't matter. But most of all, they did two things. One, the fees for trading on ETH and BTC are down by 90%. That's a lot, guys. It means being able to trade with a really real low level of fees. And that's something that's really important also for the strategy that we will use in a moment. On the other side, they are rewarding with APR for trading and to provide liquidity. Yes, there is also this big opportunity that is pretty juicy because they change a couple of things, but maybe we'll talk about that in another moment. I don't want to bother with too many information. Yes, it's possible also to provide a liquidity and earn around 500%, even more. Doesn't matter right now. I don't want to I don't want to give you too many numbers. What we care is about being paid for trading. And let me show you. One important thing, guys, the only way to get the 90% of discount to fees, that's something that you can get only if you use the link that you can find into the comment section and also into a description. That's the link. You have to bind your account with that link. It doesn't cost you anything, obviously. And in that moment, you will start benefiting for that kind of discount. Guys, do that because otherwise you will have to pay full fees, and obviously also the kind of APR that you can get from the strategy we'll see just in a moment will go down dramatically. Now that we have understood that, let's see the platform in action. So we are into the application. If you click on Earn, you will be redirected to this page. And if you click to Position Mining, this is where you can find the information about how much you can earn just by trading. Literally, this is the max APR that you can get by trading. And as you can see, we are seeing a situation where trading on ETH or BTC, it's about 2,500% APR, or as you can see on ETH, it's about 3,300 APR. And as you can understand, it's around 10% per day. So really a lot. Going down, you will see that there are cases like BNB that is paying up to 10,000 per year and so on. So there are many pairs and many of them, they are paying you a lot. The example and the strategy that we'll share with you, it's not with these, let's call them degen pairs that are offering you up to 10,000 APR, mainly because in the moment when you use the other pairs, it's not ETH or BTC, the volatility of that pair it's much higher, so also the risk. But nothing prevents you to use this platform to trade, because on top of the profit that you can generate just by trading, if you are a good trader, guys, obviously you need to trade good. The strategy that will tell you, it's something that is mainly deal trade neutral, so even if you are not so good on trading, you have to pay attention to a couple of things, but it's a good way to earn either way. But if you want to earn more, yes, you can, but remember the risk that is connected by trading. So I know it seems too good to be true. The reality is that it is true. Obviously, there is one thing that you have to remember. This APR here refers to the fact if you are locking your rewards for 1 year. It's up to you. 1 year is still a period when we can expect that we are still in a bull run, but it is a pretty long period. If you want to receive the rewards immediately, you have to leave on the table around 90%. If you want to lock them for just 3 months, this is a much more predictable timeline. You can receive around 25%. So it means that instead of having an APR that is 3.4 thousand, you will have an APR that is around 850, that is still a pretty good APR. So this is something that you have to remember. Honestly, I was trading at the beginning, keeping the whole, so locking my rewards for the whole time, so for a whole year to have them all. right now I'm considering a strategy, and that's what I will show you, a strategy where you are just locking for 90 days, receiving 25% of your rewards. So what is that you have to do? Let's suppose that we are using Bitcoin. So I prepared for you a calculator, and let's discover together step by step how much we can really earn and why. So we start with 2.5 thousand%. That is the maximum APR on Bitcoin that we can earn. Okay, let's suppose that we are leaving on the table 75% because we want to have our profits in 3 months. So what we have to do is 200 and 500 divided by 4, and we have a 625. We want to calculate the daily APR. So what we have to do is doing this one divided by 365, and we have 1.71%. Now we have to take in consideration also another thing that is about the leverage, because in the moment when we are seeing here, this is the maximum APR if you're using a leverage of 100. That's pretty a lot. We don't want to have a so high leverage, but we want to use it either way, something that is pretty juicy. And for this strategy, we will use a leverage of 50. And I will explain to you why I picked this number. So this number is 50. If you want to be more conservative, I would go for 25, 30%. It is much more conservative. But just for the example, I will use this number. So you can do here, and dividing this number by 4, you will get the daily APR for 25, or if you want to do that for 50, this is the daily APR that you will receive. But there is another thing that you have to take under consideration that is about fees. Yes, I was telling you that there is a 90% discount on fees, but there is still something that you have to pay. These fees are 0.002% on the whole position. So in order to calculate your real fee, you have to multiply this number by the leverage that you have used. So let's suppose that we are using a 50 leverage. We need to multiply this number by 50. So we will have a 0.1% of fee that is multiplied by 2 because you have to pay this number in the moment when you are opening and closing the position. Obviously, when you trade, there is another thing that you have to take in consideration. It is about the funding rate. As you can see, equation has a funding rate that is around 0.001%. That's something that changed during time. The reason why we will ignore that is because I want to propose to you an edge position, and I will show you in a moment exactly how much you can earn with that. Obviously, this is not preventing you to trade by as normal, and as you can see, aside of the profit that you can do because maybe you are also a good trader, you can earn that amount of APR that is everything on top on what you are earning as a profit. If you want to know more about how much usually you would pay in terms of funding rate, that obviously, guys, remember the funding rate, that's something that if it is positive, long position are paying to short position. If it is negative, short position are paying to the long position. Obviously, if you are hedged, the same amount that you will pay for one position, it will be the amount that you will receive with the other one. So if we go to markets, you will see it just expanding here that under the funding, you will see how much is the funding, how has been changing during the time. Remember that according to the level of utilization, so how many people are saturating that pool, the APR, so the amount that you have to pay in terms of funding, could go up or down. Going back to our calculator and finding which is the real gain that you will get, you have to use this number minus the fees that you are paying, that is about 0.65% each day. That multiplied by the number of days that we have in a month, we will have an APR, net APR for each month that is about 20%. So this is the yield that you will earn each month. That means an APR that is this multiplied by 12, that is about 236% each year. So still pretty a lot. But let's check it out exactly what you have to do and why I picked this number. So what I'm saying is that in the moment when we open a position, if we open a position long and we open a position short at the same time, we will be hedged. So both positions will start farming the token and we will not expose to either if the price goes up or goes down. What we know each day is that on average, the volatility of Bitcoin is around 2%. So if we use a leverage of 50, in any moment we have a 2% up and 2% down before being liquidated. So we are covering a volatility that is about 4%. Obviously, it's not for granted that we will not be liquidated. What we have to pay attention is that we need to use take profits and stop losses. What I mean is that if you are just opening a position hedge, you are still exposed to the volatility of the market, because if the market goes above your 2%, well, it is liquidating the position that is short, and if the prices keep going up, well, you are even more in profit because you will have your long position that will start earning and we will go simply up. The point is that you don't know if the price will keep going up or not. And what we want to do is just building a neutral strategy. So what we do is having for both positions, the same stop loss and take profit. Obviously, if for one position that price would be for a long position, it will be a stop loss. The same price will be a take profit for a short position, and vice versa. For long, the take profit will be the stop loss of the short position. And guys, remember, put this number above the liquidation price of each position. Why? Simply because if you are being liquidated, you risk to pay also the liquidation fee that will cost you much more than what you will earn. On the other side, put a stop loss and take profit not just 0.0001% above the liquidation price, because if the movement is too impulsive, the risk of being liquidated and having to pay the liquidation fee is high. So guys, put the stop loss and the take profit according. Obviously, there is another reason why I choose this amount, and I think that the leverage of among 25 and 50x on this strategy, it is something that is suitable. You can even use a higher leverage if you want. For example, during the weekend on Saturday, that on average the volatility is much lower, even using a leverage of 66, 70, so increasing a lot the APR, can work, because we know that in the weekend the average volatility is about 1.5, 1.8. That's the amount. But that's not something that is for granted. Obviously, if you put correctly the take profit and stop loss, you will be covered at most. There is another reason why I'm using this strategy on a daily basis, mainly because the APR that you are seeing on the earn on the position mining, that's something that goes down every day. Every 24 hours, your multiplier will go from 1 to 0.75. So you will start earning 25% less. And after 48 hours, you will start earning 34% less. After 3 days, you will have 3 days, 4 days, I still don't remember the exact number, you will have around half of the APR. So that's the reason why I rather prefer to work on a strategy that every 24 hours, but I'm just giving you the whole picture. You feel free to readapt the same strategy to the way that fits at best your risk appetite, because obviously, guys, there is also the risk which is, well, the platform could be hacked. The volatility in the moment when you are opening the price is insane, and that's something you have to take in account, because if even if you use a limit order and you use the same price to open the long and short position, you are not granted for sure 100% that it will be the same price, simply because according to the volatility and according to which is the position that will be executed before, well, you can be into the position at a certain price, the long position, while having a different price for the short position. So you have to take in consideration this thing here. On the other side, you can also take in consideration the price of the token. You are not granted that in 3 months the price of the token will be still 7.2. My opinion, even if, yes, it's true that selling pressure could be high because this kind of liquidity mining programs are creating selling pressure. On the other side, well, the current circulating market cap is not even 1 million. So we're talking about 700K. So it is plenty of space to go up and to recover. Even something like 20, $50 per token, it is something that is achievable. So it means 7 times higher. So if we reach again the 50, this strategy, instead of producing just 20% per month, can produce you 140% per month. So that's something that potentially it is insane. But obviously, be aware that the platform is not something sure 100%. It could be hacked, and that's something you have to take it in account. Maybe something happened bad to the team, and the platform has to close. You have to take all the risk into account. But I truly believe I really like this strategy. I will use it also for myself. Let me know if you have any question to the comment section below. And obviously, this is just a strategy. Again, they are literally paying you to trade. Don't go all into this platform. That's something that you have never do. Don't do. Doesn't matter how much they are paying you. Use it. Take the opportunities, but diversify the risk. Because yes, whatever you will use, the risk is always there, and you have to be able to defend yourself. So, guys, please be aware of that. Let me know what you think. Let me know which is the best strategy. Into the next future, I will also share more about the pools, how to provide liquidity with leverage. The APR is pretty good, but you have also to be aware of a couple of things on how to defend yourself and how to edge your position in order to avoid of losing money. Guys, thank you for following me. Don't forget, leave a big thumbs up, and I will see you soon with another video. Bye, guys.